today to join us for our Simplifying the Secure Act 2.0 webinar. My name is Sue Pokorny, and I've been a consultant here at RPI going on 5 years now. Prior to RPI, I spent 20 years working with the Infor Lawson products and have both practical and implementation experience across the full suite of HR talent. Joining me today is my colleague Ariane Silva, who will introduce herself and walk us through the agenda.
Hello, everyone. My name is Ariane Silva. I'm a senior consultant here with RPI. I've been with RPI for about 10 years now. I guess time flies when you're having fun, right? I work a lot with GHR benefit implementations. So I know that a lot of our clients are now getting ready and trying to research all the provisions that are coming in based on the Secure Act 2.0, right? Trying to figure out what system changes might be needed, what Infor has already made it available, right? And how to test that out. So we are hoping that today's presentation can help you first navigate through those changes, right? One of our goals here is to show you what is already available in terms of system functionality. And also, we are hoping to answer some of your questions. I don't think we're going to be able to answer all of your questions right now, but we can certainly try. So if you don't mind going to the next slide, I just want to do, quick disclaimer here. We do not offer legal advice, right? So one of the things that we suggest is that you refer to your legal department, make sure that you guys understand, the regulation, and based on the provisions, what applies to you, what applies to your organization, right? And we are also, the presentation today reflects our understanding of system functionality, what changes, right, they're gonna be needed. We are monitoring all of the new enhancements and everything that Infor is releasing, and we will be doing additional testing, right, in terms of this new functionality. We'll make sure that you guys are always up to date, and then you can be informed in terms of those upgrades and enhancements. Let's talk about our agenda. So we want to get started with a brief overview of what Secure Act 2.0 is, right? And then we're going to dive into some of those provisions. So first thing we want to talk about the term eligibility for part-time resources, what that is, system impact, same thing for over wage limit, the super catch-up, auto-enrollment. After that, after we talk through those provisions, then we're going to switch to Infor, and we are hoping to give you guys a quick demo of what are the functionality that is available, what you can start testing right now, and how to test, right? Then we are hoping to end this presentation with what are the upcoming enhancements based on, we know that in October, right, we have a CU update. So we are hoping that with that update that we get some enhancements with the system. So we're going to talk a little bit about that. But without further ado, let me hand it over to Sue so we can get started.
Sorry about that. I was hitting the button way too fast. Okay, so first, let's talk about Secure Act 2.0. The Secure Act 2.0 from 2022 builds on the original Secure Act from 2019, and the intent was to strengthen the retirement readiness of individuals throughout the country. It's aimed at expanding employees' access to retirement plans and increasing their individual savings for retirement. As a result of the Secure 2.0, there are several updates needed in our HR and payroll systems to ensure compliance, specifically around benefits, deductions, and contribution limits. Today, we're going to cover the regulation changes for 2026, and the system updates Infor is planning to deliver in October that will support the new legal requirements. Again, our focus for this presentation is on multi-tenant HR talent. For any S3 folks on the call, feel free to stay on if you'd like, but today's demo is going to cover HR talent. Ariane, I'll let you kick off the first requirement.
Thank you, Sue. So we're going to talk about the part-time eligibility provision, right? So under the Secure Act, employers offering 401k plans, they were required to basically offer those plans to part-time resources if those resources have worked more than 500 hours per 3 consecutive years. What changes with Secure Act 2.0 is that they shorten that period to 2 consecutive years. In terms of system impact, what are the things that we need to make sure we are tracking? So we need to make sure that we are tracking employee hours worked and that we can identify what are the employees that have worked those hours, right, per this specific period of time, so that those employees can be offered retirement plans if they haven't already been offered, right, up to that point. So I think we are gonna cover that piece in a minute, and we are gonna show what is available in terms of system functionality to support this provision.
Okay, so let's talk catch-ups, specifically the mandatory requirement for Roth contributions. Starting January 1st, employees 50 plus years of age who made $145,000 or more in the prior year will be required to make their catch-up contributions on a Roth basis. To do this, the system's going to need to identify who those high earners are. It's going to need to monitor their pre-tax contributions, and once they hit the pre-tax limit, their deduction will need to be converted to a Roth deduction. I want to call out here one thing to keep in mind. For your new hires, it's the employee's responsibility to ensure they're setting up their contributions in accordance with the new regulations. You're not going to know what their earnings were with their previous employer, so they'll need to make sure they're setting up any catch-up contributions correctly. To make it a little more complicated, the Act is also introducing a new catch-up limit. This new limit is referred to as a super catch-up, and it applies to employees ages 60 to 63. They're allowed to contribute a higher catch-up amount. And again, just like with the regular catch-up for our 50 plus employees, if they earn more than 145K last year, this deduction has to be a Roth deduction. Once the employee hits age 64, they're going to return to the original catch-up rules used by the age group of 50 to 59. To help manage the catch-up rules, we've created a matrix that will hopefully assist you when identifying a Roth contribution is required. Here in the table, you can see we have the age groups here. We have the contribution limits for the calendar year 2025. These can be made pre-tax. The catch-up, this is the catch-up rules for any individuals under 145,000 in last year's wages. And this is the column for the catch-up rules for anyone over 145,000 in wages last year. So with age 50, anyone up to age 50, they can contribute to the 23.5. This can be pre-tax, after tax, their choice. Age group 50 to 59, again, they have the 23.5 limit, but if they're under the 145, they can do their catch up to any eligible plan, whether pre-tax or after tax, Roth. If they're over the 145, their catch-up contribution has to be a Roth. Age group 60 to 63, this is your super catch-up group. They have the 23.5 for pre-tax. They're allowed 11,250 for their catch-up. If they're under the 145 wages last year, they can do pre-tax or after tax. If they're over, it has to be a Roth. And then again, once they hit 64 or they're greater than age 63, they go back to the same rules as the 50 to 59 group. If they're under 145 in wages last year, they can do pre-tax or post-tax. If they're over those wages, it has to be a Roth. Additionally, the Secure 2.0 is also introducing mandatory enrollments with automatic contribution increases for any new plans offered by employers. The key here being any new plans. New plans are defined as any 401k or 403b plan established after December 29th, 2022. For these plans, the automatic enrollment at 3% took effect on January 1st, 2025. And the first automatic increase for those individuals is happening as of January 1st, 2026. Two things to keep in mind here. Employees do have the option to opt out entirely or change the amount of their contribution, in which case the auto escalation would not apply. The second thing, employers who have been established for less than 3 years or who have fewer than 10 employees are exempt from this requirement. Ariane, let's jump into the system.
Thank you, Sue. So if you guys give us 1 second, we are going to show Infor now for a quick demo. Sue, can you see my screen, right?
Yes. Yep, I
Perfect.
gotcha.
Thank you. We are going to start with the review of the new flags that have been created to support the Secure Act 2.0. And I want to show you guys how to access that information, right? Under benefits, and you also have access to the employee profile, basically from all those different roles, right? Administrator, payroll role, but we're going to be showing you the benefits role right now. So under benefits, if you go to resources, select an employee. I'm going to use our testing resource. Double click on their record. The benefits tab has been updated with a Secure Act section. And this section is going to have those, as of right now, those 3 check boxes. First one lists eligible. So this is basically going to and we are going to talk through the job in a minute, but there is a job that is going to run and it's going to update those flags accordingly. The idea is the first one, resources, they're eligible for retirement based on their hours worked. The overwage limit should indicate every resource that is that has over 145,000 in wages from last year, right? And the catch-up eligible should list all of our over 50 resources. There are some enhancements to those check boxes, and we're going to talk about this later on. But I would like to go through the job now, just so you guys can see how those flags will get updated. You could always run an ISD upload, right? If you don't have any of that information, you could run an ISD upload and check those flags. But Infor has created a job which is under maintenance, processes, Secure Act eligibility, that should help you identify the resources falling under each one of those different provisions. If you select the job, you are going to be under this Secure Act screen, which has 2 tabs. The Create Report is under the Proposed tab. So if you click under the Proposed and select this Create Report. If you guys are already familiar with benefits processing, you will see that this is very similar than any other report that you have in benefits, right? Once you click on Create Report, you can select the benefit group. I would say you probably want to create a group with, like all of your active resources that need to be evaluated. Those, as of right now, the job needs to run for all those different provisions, right? So the term and eligibility needs to be populated. You can see here this asterisk indicates a required field, so you need to populate that. But if there are, any changes to this requirement, we'll absolutely keep you guys posted, right? Again, depending on Infor updates. As of right now, you will need to populate the determined eligibility, all of those parameters here. The FTE threshold, you can add something like 0.1, right? We don't want to add a 1 FTE here because we want to make sure that it's evaluating those part-time resources as well. Pay class, you would have selected the pay class that is related to the employee hours worked, as you guys can always coordinate that with payroll, right? And then Infor had actually created those parameters so they are user defined. In case some of those provisions change, right, we can just come in here and update the values. So as of right now, the requirement for the part-time eligibility evaluation is 500 hours, right? So we would plug in 500 hours in here. And then they had initially created this job for the 3 consecutive years, but we know that as of right now, we just need to evaluate the 2 years. So we can, in our case, I'm running the job in 2025, so I can add 1/1/2024 to 12/31st 2024, 1/1/2023 to 12/31st 2023. This one can be blank for now. The determine over age limit, again, this is a user defined field, and we know as of right now, the provision establishes that any resources with wages over 145 years in the previous $145,000 in the previous year, right, will be subject to the overwage limit provisions. So we can add that in here. The wage source, our understanding is Infor will be releasing some enhancements to this list. As of right now, we are not able to see the HRT wages, which would be the wages coming from your JHR payroll, but Infor has some enhancements that will bring in that functionality. For now, I would recommend, if you want to test this functionality, query your hours work loaded to one of those business classes. You would be able to validate this report. If I select wage history, taxable wages, for example, the system is going to ask for what year, right? What year do we want to evaluate? In this case, I would have put 2024. If you were running 2025 in 2026, right, you would have put 2025. Then we have the determined catch-up eligible. That would tell the system would say what resources are over 50, right? So we want to evaluate, in this case, I want to evaluate up through the whole year, 2025. What are the resources that are going to be turning 50 this year that we should be evaluating for the catch-up eligibility? So once you populate those parameters, then you can submit your job. I'm not going to submit it right now because I already ran this job. The results of the job should show up on this proposed tab. So you can see here this is going to list all of my employees, the ones that are part of my benefit group, right? And the system will basically say, okay, those based on the evaluation, right, that it did, what are the fields that will need to be changed? And those fields will be indicated by this little exclamation point in here. You can see it says proposed change to employee. So if I look at my employee number 3, for example, on the current tab, let's search for him. That employee, as of right now, their eligible flag is set to yes. The overwage limit is set to yes. The catch-up eligible is set to yes. Well, what Infor is proposing, what this job is proposing, is to change the overwage limit to no based on the hours worked that is evaluating, right? So if you do want to update those records, what you would do at this point is you can update the selected employee. In this case, it's only going to update my employee number 3, or you can update all employees. At that point, your proposed resources would all be updated, and if you open the resource record, you would see the changes on those checkboxes. This is what the Secure Act eligibility job is going to do, right? It's basically identifying those resources. So what we are going to cover right now is basically the changes that Infor made to support the auto-enrollment. So Sue talked about that provision a little bit earlier. We do have some changes on the contribution table, and I want to walk you guys through those changes and what jobs we can leverage, right, in order to see that auto enrollment happening in the system. So let me switch back to Infor. If you guys can see my screen, we are under plans. And then we are going to look into our test 401k plan. One of the things that if you don't already have that, and again, this provision is for new plans, right? But if your plan is being introduced now, you would need to set this plan as an always default for this process to work. Once you select this plan as always default, the system would allow you to select a percentage for resources that are, now eligible that should be auto-enrolled in it. And it will auto-enroll them with that initial percent. That additional information is going to be under your contributions tab. So if you double click on your contributions tab, you can see here that we have a section for Secure Act percent increment rules. So those are the two fields will be, two sections, that will be looking to populate. The default rule, which with what should be the initial default for the employees that are now becoming eligible, and then what should be the automatic increment for this plan, what is the maximum contribution percent. And that is one thing I want to show you. It's a little gotcha at this point. We still don't know if based on Infor new updates, if we're going to have any changes to that, but you can see when I'm creating my contribution table, those fields are available. But as you populate this information in the plan, you can see up to this point, my field is still available. If at the moment that I populate a calculation, you cannot change that anymore. Just keep in mind if you guys are testing and building this contribution for the first time. Another thing that I want to show you, and it is related to the auto enrollment, that is an existing job, which is the mass enroll in default plans. This job can be used to auto-enroll those resources, right, in the plan. If you had that always default set up, right, enabled, you can select the plan, and then they created the Secure Act auto-enrollment, so that will indicate what plans do you want the system to evaluate for the Secure Act. And then once this job runs, it creates that enrollment for the resource. One thing you guys can check is under benefit resources. If you search for the employee enrolled in that plan, you will see that they have the Secure Act auto-enrollment flagged. If at any point in time this resource should no longer be considered, right, we probably want to make sure that we are removing this flag. Every year then, right, you will have the auto-enrollment kicking in. Most likely you will have to create new contribution tables. So if I create a new table for 1/1/2026, we can go under our maintenance, processes, and benefit plan update. This job should be responsible for then updating all the resources enrolled in a specific percentage to the next tier. So this job will be basically, we'll make sure that auto enrollment is happening, the auto increase is happening. So this is basically, and again, we've been, following a lot of the releases, right, that Infor has. We've been testing a lot of this functionality, right? There are some enhancements coming up on the October CU, and I'm listing a couple of them in here. This functionality have not been tested by us yet, right? So by the time that this is available, we'll be testing each one of those. The first one is something that I already mentioned. They are going to be including an additional wage source on that Secure Act eligibility job for clients that are using multi-tenant HRT payroll. The second is the implementation of the super catch-up identifier, because we know that, resources between that 60 and 63, they go into a super catch-up, then back to a normal catch-up. So they are introducing a new checkbox that can help us with identifying who those resources are. And the last one is allowing different tiers for total contribution limits, which this will help a lot, especially with the now different catch-up requirements, right? Okay, so let me switch back to the system. Let's take a look at the contribution limits. This is going to be under the payroll module. I'm going to go under payroll administration and set up our deductions listing. It's going to have the defined contribution limits and defined contribution rules. So the defined contribution limits is where we can add the max compensation and deferral amounts. And Infor is going to bring some enhancements into this screen so we can use it, because this maximum contribution is going to change right now based on those different age requirements. So we need to make sure that we are accounting for that as well. Another thing, and I'm sure we're going to have a lot of questions related to that, the rollover, right? Basically, when resources are hitting that 145,000 earnings on a previous year, and they have reached a catch-up contribution, right? The provision determines that catch-up contribution should be done in a Roth basis. We have been testing some of the functionality that Infor suggested, right? The linked deductions, and some of limit deduction codes and things like that. We're still not in a place where we can fully show you guys results of this testing, but we are hoping that also the enhancements that are coming up in October can help us with finalizing this testing as well. Now I'm going to hand it over to Sue so she can talk a little bit more about like some considerations, right, in terms of the Secure Act 2.0 and those changes in the system.
Yes. So, important considerations and really what's next? What are your next steps? Um, Things to consider. Do you offer 401k, 403b, or 457 plans to your employees? If yes, we recommend you review the new requirements and determine how they're going to impact your workforce. Change. Keep in mind, changes are not only needed on your benefit plans, but also with your deduction structure and with BSI. We highly recommend that your benefits and payroll teams test these changes together to ensure you're handling the contribution and limits correctly. Again, when auto enrolling and auto escalating employee contributions, employees can change their contribution amounts. And once they change their election, the auto escalation no longer applies. We also recommend updating your benefits guide to include the regulations regarding the Roth catch up contributions for high earners. This will alert your new employees who are eligible for those catch ups of the new regulations. And then finally, as Ariane just kind of talked about, we're actively testing Infor's recommendations and running into some of the same testing issues as some of you. Infor is planning to include Secure 2.0 updates with the October release, so more is coming. However, start your testing now so that you're prepared to continue testing once the release comes out. Um, in the meantime, here are a couple helpful KBs from Infor. And as always, we're here to help. If you have any questions or need assistance implementing these changes, please email us at questions@rpic.com. And thank you all for attending and have a great day.